Okay, hello everybody and welcome to this IC Markets live webinar. My name is Chris Wilson, I'm from Trade with Precision and I welcome you all on board here today or tonight, depending on your time zone. There's a few of you on here, not too many, which is good, a nice relatively small crowd. What that means is we can be pretty interactive and take questions as we go. If we have too many, it can be a little bit difficult, but there's not too many. So what I'm going to do is just pop out my question box now and have a look at that. And at any point during the webinar, if you have any questions on what I'm talking about, please do type them into the question box. And also now, if you wouldn't mind just typing in that you can hear me, that would be handy, just so that I know that I'm not sitting here talking to myself, which would be awesome. Thank you, Abdul. Welcome on board. And just monitor that throughout the course of the webinar, if you wouldn't mind. Zabajit, I think, Leon, welcome. That's good. And just monitor it through the course of the webinar. And if there's any disruption, do let me know and I'll see what I can do about it. So let me put that away. Okay, 1 second. Let me get a few things away. Okay, so what we're talking about today, mastering price action analysis with candlestick charts. So candlestick charts are obviously the most common type of charts that traders use, I would say. There's obviously line charts, there's bar charts, there's a few others, but you know, your typical candle charts with your red and green candles going up and down is what, you know, by and large most traders use, and very good reasons for that. Just have a quick look at this risk disclaimer first. Just make sure you're okay with the information on here. There are risks involved in trading, and you certainly have to be well aware of those before you dive into the live markets. Okay, so what's our agenda today? Setting up effective candlestick charts. So I'm going to show you the IC Markets platform that I often use. It will be a demo platform. It will be a one that we use for training, but very similar to the one that I use. And I'll show you what how we structure our charts, how we set up our charts, what the indicators that we use are. There are literally hundreds of indicators that you could use. We are, I would say, predominantly trend following traders at Trade with Precision. So we're looking for markets that are either going up or going down, as long as it's not going sideways. And when you do have momentum of a trend on your side, that's where we feel you have an edge in the market, and you're more likely to win trades than lose trades. For instance, if it's gone, you know, we know how trends behave. Let me just grab a pen. Trends move up in waves, a wave up and then a pullback, and then a wave up and then a pullback, and then a wave up and then a pullback, until such time as the trend ends, maybe there. So at each point you've got a wave and a pullback, a wave and a pullback. So really where you want to get in is that pullback just there, because if you have high, sorry, there's just 1 second. Apologies, I have a dog chasing around toys. Anyway, you really want to get in at this pullback. So when you have higher time frame momentum pushing up, and you can identify that, it is more likely that the trend will continue. So as long as the trend is more likely to continue than not continue, as in it has higher time frame momentum behind it, then it makes sense to trade long until such time as that trend finishes. So again, a trend is a series of higher highs and higher lows. That's an L, higher highs and higher lows. At the point where it makes a, say, slightly equal high, let's call that an equal high, even though it's not quite, that's a sign that the trend might be running out of steam. Then when it breaks the previous low, okay, as soon as it breaks that, we know it's going to make a lower low wherever it ends up. We know it's going to make a lower low. So for there, the trend is over, and then it potentially starts to head down. So that's kind of what we're looking for. And candlesticks are really important in that they show you these waves in action. You know, you get a series of green candles, and then the green candles get smaller. Then they turn into sort of what we call indecision candles that are not sure where they're going. And then we're talking in an uptrend now. And then they turn into red candles. And red candles sort of start small and get bigger and bigger and bigger. And then the red candles run out of steam. They get smaller indecision candles, and you start to get green candles. And then that sort of signals the next wave up, if you like. So we're looking at the type of candles, what is the color, what is the size, and where are they in the context of this wave pattern that we like to look for. As I say, right here, you'll get it in this sort of area here, you'll generally get a series of big green candles, and then here to here, you'll get a series of, you know, not so big because you're in the context of an uptrend, red candles. Then this sort of area and this sort of area, you get small candles. We want to get in on the small candles because that's where the trend is gathering sort of steam for the next move, if you like. Then we will look at tools and patterns to identify trading opportunities, and all of this live on the IC Markets platform. So basically, all of these points can be discovered in a typical live market scan, which is what we do day in, day out as traders. So I'm just going to jump into live markets. And I have to say, I wasn't particularly well yesterday. So this is the first time this week I've looked at the markets, which is, you know, good for you because I can show you exactly what I do when I jump into the markets for the first time. Excuse me. Okay. But before I get to that, let me just explain to you what are the elements on this chart. So this is the IC Markets C Trader platform. This is the one that I typically use. Here is a candle chart. So what I was saying before is this is the euro dollar, which is probably the most commonly traded currency pair in the world. So from here, which is, you know, January 2021, all the way down to, you know, July, we've been having some serious downtrending, okay? A series of red candles. Sorry, get out of the way. Series of red candles, okay? You can see that they're all red. Now, therefore, this market is in a serious downturn, except for the last couple of months. Now, this is a monthly chart, so each candle represents a month's worth of data, a month's worth of trading, okay? So now the current month, it is the 6th of December, so the current month is not finished yet. So you can't really, why does that keep coming up? You can't really take this one into account completely because it's not finished yet. We don't know how this will finish, certainly not simply by looking at the monthly chart. We're looking at the previous month, and it was a serious bullish month, which was a pullback into the moving averages. So when I said before how trends wave down, this is a big wave down. There's a pullback. I keep going across the target, and that keeps coming up. I'll try and stop doing that. This is a wave down, and this is a bit of a pullback here. This is a wave down, and this is a much bigger pullback here. Now, the other things we have, so you've got to identify, you know, certainly from a monthly perspective, from a higher time frame perspective, what is this market doing? It is in a downtrend, and it is pulling back. And it is pulling back to a significant level of resistance. See all the touches across here? At this current, let's call that current level 1 1.05, and I'll even actually put a line in there. Got too much open here. There's, oh, you've already got a line in there, so I won't bother with that actually. You've already got that line, but I mean, it's not quite on 105, but anyway, close enough. When you're talking on a monthly chart, it's close enough. If you were going to go down the time frames, you'd want to get that a little bit more specific. But you can see here, there's a serious, you know, from this point here, we traveled all the way down and hit that, and then bounced off it and hit it again, bounced off it, hit it again, bounced off it. More seriously, came down, bounced off it again. Crash did react to it here as well, and gave a pullback, and now we're pulling back to that level. So this level here at around about the 105 area has provided support on multiple occasions. So you would therefore expect it to provide resistance when pushed from the other side. Okay, so once support is broken, like it is here, when price pulls back to test that level again, it becomes resistance. And although this is only this monthly chart is only, sorry, this monthly candle is only fairly new, excuse me, you can already see that it has tried to break up beyond that 105 level with this big sort of wick on the candle, as we call it. The wick candles have tails and wicks. That is annoying. And this has a particularly high, well, not a particularly high wick on it, but a wick that's gone beyond 105 and rejected that. Now we're still a little bit above 105. As I say, the 105, what are we, 105.104. The level on the monthly chart may be not precisely 105. It may be 105.10 or 105.20, who knows. But the point is, there is a distinct level there that it is likely to react to. Now, the other thing is, when we look at our charts, the other indicators that we have on this chart, just looking at your question, nothing major. The other indicators, the other elements that we have on this chart are these 4 moving averages. I mean, tell me if you know all this. Tell me to skip ahead by all means. You know, it's a little hard to sort of know what level people are at. But if you know all this, I'll just get into assessing markets, which we'll do in a moment. But I just want to, as the agenda said, explain the elements of this chart. So simple moving averages is what we put on our charts. Okay, you want to find in your indicators, drawings, sorry, where are we? Indicators, find your indicators. They're all here. You just generally trend indicators, or you can just hit find indicator and put in simple moving average. That's what we want to put in. And you want to put 4 of those on your charts. This is a 10 period moving average. This is a 20 period moving average, the blue one. The red one is a 50 period moving average, and the green one is a 200 period moving average. So what these do is effectively smooth out the price action. So at each vertical point on this line, where it is now, say for instance, is the average value of the last 10 candles. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. These 10 candles, the value of all of those is taken and averaged, and that's where the line is plotted. And at each point, corresponding to each candle, is the same thing. It's the average value of the 10 candles that precede it. Likewise, the 20 period moving average is the average value of the last 20 candles. So all the way back to about there also, maybe there, who knows. This is the average value of the last 50 and the average value of the last 20. And what these do is they give you a sort of a, what do? They give you an equilibrium level where this price is, where this market is likely to pull back to. So if I just grab my highlighter, when the 10 crosses over the 20, as it's done here, it gives you this zone, right? Which we call, in the case of a downtrend, a sell zone. So when price pulls down and pushes down rather, and pulls back into this between the 10 and the 20 period moving average, that's what we consider the sell zone. So in the context of a longer term downtrend, it's pulled back, it's getting stuck on resistance at 105, which we've identified. You would expect it to turn around and gather steam, eventually gather steam and go back down. In general, that's what you would expect it to do. Now, this is the monthly chart, so we've got a lot more time to play out before we actually see that happen, and it may not happen. It may pull straight back and keep going. It may do that, but that's what you would expect just looking at that chart. Now, the other thing you want to do, so if you had a sentiment, so your monthly sentiment for this market would be, I'm expecting that to pull up and start to roll over and pull back down again. So then what you want to do is look at your other time frames, go down the time frames and see what that looks like on other time frames. So on the weekly, okay, first of all, before we even get to that, let me just say, this market is moving too fast for the moving averages on the monthly. Okay, you really want to find the month that the price action is closer to the moving averages. Look at the weekly. So, from here, this here, right? High, low, high, low, high, low, equal high, and pulling down to lows is this region on the monthly. But once it breaks that previous low, okay, at about 1.175 or so, we're now in a downtrend on the monthly. So what does that look like on the weekly? We go back down to the weekly, and you're starting to get these, moving averages that are crossing over nicely. The 10 crosses the 20, and then the 20 crosses the 50. That means it's even more established. You don't necessarily have to wait for it to cross the 50, but it's good when it does, because that's even more established. And then you get these nice little push downs and pulls back into that equilibrium zone here. So each time you get that, you've identified a downtrend, and you've identified that the moving averages have given you this sell zone, okay, this equilibrium zone. Okay, so once you've identified that, then you can look for opportunities where price pushes down and pulls back into it. It gives you a number of green candles that signify the pullback, and then it gives you a red candle which signify that the pullback is over and the next wave is coming. Pull back into the moving averages, gives you a red candle, next wave is coming. Pull back into the moving averages, you could have taken it on this one, but it probably wouldn't have triggered. So you may have taken this one, down we go again. And each time that happens, even this one here, down we go again, you can take advantage of all of these moves until such time as it gives you a deeper pullback. Okay, so that's exactly what it's done, because it's given you this massive pullback on the monthly back to the monthly moving averages. Obviously, that means we're going to see on the weekly a pull beyond the sell zone, which means you wouldn't be considering a short opportunity at the moment, because you've gone past the sell zone. So what you'd be doing there is, so basically every chart below that, the daily, the 8, the 4, the 2, the 1, will probably look like an uptrend. So as I say, once you start making higher highs and higher lows on the charts below, you can assume that you can be trading to the long side until you get to that massive support and resistance level that you've identified at 105. Now, obviously, we're at 105 now. When you look at the daily, you can see here's that pullback and here's that uptrend, which is a pullback in a little bit more detail. And this here is an opportunity to trade to the long side. Now this candle here, the top of that candle is just above 103, which is awesome. That means it's holding above it's held above 103. The idea would be to enter long above the high of that candle and put a stop loss below the low of the swing low, which is, you know, the wave has pushed up and then it's rolled over and it's given you a red candle. So that pullback, the base of that pullback is the base of this particular candle, 102.64. So you might put your no, that's the moving average. So you might put your stop loss just a couple of pips below that candle there. And the theory is if it breaks the high of that, then it's highly likely that the next wave will come. Now, at the moment, you do have that 105 level, so that's a little bit of a concern. If we go down the charts, you'll probably find, what will you find? You're sort of finding that it's pulling back quite seriously now. It's pulled back beyond, no, not quite. Big pullback though on the 4. So on the 2, it's going to look, So you can see that the uptrend here has pretty much ended because you've broken the low. So if you go down the 1 to the 1, it now looks like, if you go down to the 15 rather, it now looks like a downtrend. Okay, so you've topped out about 105.9 and you're now moving into a downtrend. So the charts are a little bit mixed at the moment because again, you know, you've sort of struck that level and it's proving to be, you know, somewhat of a resistance level. Now, before we get any further, the other thing I want to just put on the chart, just draw your attention to on the charts here, is the MACD and the RSI. After I explain those, we'll just go into sort of full market analysis. But actually, if we take that on the weekly, now, as price moves to new lows on the price, you want to see the MACD doing the same. So if we grab a crosshair and we put a crosshair over, say, that low, and we look at where that MACD is, for example, and we compare it to the one before, and the one before, we can see that each time price makes lower lows, the MACD is doing the same. Now, the RSI is the relative strength index. We use exactly the same way. Again, put your cursor on that low, and you can see where the RSI line is. Compare it to this low. Now, bear in mind it can be equal or it can be lower. What you don't want to see is you know, when you pull back here, when you push down and pull back and back into the sell zone here, so you're back into the sell zone, right? It hasn't given you a bearish candle at this point here. It's never given you a bearish candle, and you're getting massive, what we call divergence on the RSI. The RSI is often the first to show you divergence, but sometimes the MACD will as well. But see how price is pulled to this low? Then, you know, you'd have to say that's a low because it's broken the top of that. And then it's given you a higher low there. So that is a signal that this trend is weak and likely to turn around. So that's effectively how we use the MACD and the RSI as well. Okay, I'm just going to check if you. Okay, so we have some questions. Okay, sorry, Max is saying skip ahead. What time frame do you use for analysis for your trading basis? Basically all time frames, Diana, and we'll get to that in 2 seconds. Do you use other indicators too, or just what's on your chart right now? No, Diana, that's pretty much all we use, because they are momentum indicators. They show you where the momentum is likely to go. Okay, if you don't have that momentum, as in you're getting divergence, right, like you are there, then it's a signal that that next wave is not going to come. So that's how we use those. Okay, so top-down approach on this one again. What's the euro dollar doing? Pulling back into a significant level. The weekly is again pushing up, but now getting stuck at that 105 level. And as we go down the charts, we can see that is starting to show, although it is still showing a little bit of strength in these indicators, even at, compared to that high to that high. But as we go down the charts, what do we see? We see a bit of messiness in the candles. We see a flattening over there, here, which is like high, lower low, equal high. So see how it's flattened across here, but it has broken up a little bit. So that's a signal that maybe it has further to go. But the chart action a little bit above that level is, you'd have to say, a little bit messy. I mean, look at the chart action above this line. Let's just call this 104.7 level where it's gotten stuck, and now it's pushing above that line. Okay, but you've had a massive pullback here. You had a massive pullback here, but you overcame that, and then you've had another massive pullback here. Will you overcome that again? It's very hard to say. Very hard to say based on what we're seeing here. It looks a little bit, and of course, as we go down to the charts, everything is now going to look like a downtrend if we go further beyond here. So what does the 15-minute look like? And even the 15-minute is bottoming out here. So it's hit a low there, it's come back, and it's hit the same low there and the same low again. So, and it's starting to show you a touch of divergence here on the indicators. So it may be that the 15 is bottoming out as well, which means that might mean it'll turn around and come back to the moving averages. Just a little bit of indecision here. Are we going to hold above that level, or are we going to push to the downside? So at the moment, we're just waiting to see what would happen with that. Okay, so that's basically how we do the charts. If I was to look at the Aussie, it's a similar thing. Big push down, big move back into the moving averages, although not quite into the moving averages on the Aussie. And still, current month, even though it's only 6 days in, is actually bearish rather compared to the euro dollar, which was still a little bit bullish. 67 level is in the way, so that might be having something to do with it. But also, we have had some interest rate news out of Australia. Whether that's come yet or not, I'm not entirely sure, but I know that it's coming on today, so I'd be really well aware of that. You are pulling back into, certainly that 68 level is a significant level on that Aussie as well. If we zoom out too far, if we zoom out, let's say there, you can see that 68 level is a pretty, let's get it right, that 68 level is pretty massive. So we're much the same situation on this chart pair as well, in that it looks like it is a pullback into, although just beyond the sell zone on the weekly. Monthly is not quite in the sell zone. Weekly is in the sell zone, maybe slightly past, finding resistance at 68. Daily, you're again getting that divergence on the RSI, which you'd expect from these highs. That's an equal high, that's a slightly higher high with divergence there, and you're pulling back quite severely. So I think basically these markets are both pegged to the US, and I think that's probably what you'll find the US dollar is doing. If you were to look at the US dollar index, you'd probably find a similar pattern, just sort of trying to edge higher, but also a lot of downward pressure as well. So look, I mean, that's really hard to trade for a trend following trader, because you can't really see, you know, there's a flattening trend there. Well, there's no real trend. It's just a flat sort of highs and lows. It's not really going anywhere. To get anything out of that, you'd have to go right down to the 15, even the 5 minute to get anything out of that. You'd have to identify on the 5 minute that, I mean, that you're pulling back into the moving averages here and here and here. That's if you want to get right down to those time frames. And as I say, that's just to capitalize on these big waves up and down. So what would I suggest for that one? Look, it looks like it's going to turn around and move lower. That's what it looks like on the monthly. So I'll be waiting for signs of that. Same on the weekly. But you've sort of got to wait for that to appear on this time frame. You've sort of got to wait for that to sort of, you know, here's your pullback. This flattening off needs to overcome itself, and it needs to start turning around, if that's what it's going to do. Or is it going to break up beyond 68 and give us a slightly deeper pullback, which it could do too. I guess the point is you've just got to be ready for it, for any eventuality, but there is no real trending now on any chart apart from the 5 minute. Cable, very similar, obviously very similar, and again pulling back to a massive level of support. 121.5, exactly the same thing. Big red candles, big green candles back into that sell zone, right at 120 as well. Now, if it was to end this month slightly below 120 with a nice red candle, that would be exactly what we're looking for. That would signal another wave down, which is, as I say, that is what you would expect by looking at the monthly. But it's all about timing. When is that going to happen? Well, first of all, that may not happen, but that's what you'd expect. So looking down the time frames, we're looking at much the same thing. You would not, again, be looking at trading short on any time frame below that, because it's pulled beyond the sell zone on the weekly. Okay, so now we're in an uptrend back up to that level, but we're already at that level. So we're again probably just going to plateau for a little bit until we decide what our next direction is. So it's very much like what I said before. How do trends behave? And often they all sort of, well, markets are correlated more so now than I think they ever have been. But you know, a push up will eventually plateau and then pull down, and then will eventually plateau and then pull up. So when you're at that plateau, okay, you've got to be aware of that. You've got to be aware there's a support and resistance level. It's likely to pull down, and then it might give us another wave up, although in this case we're assuming that we're going to wave down. So you got to understand when you're at those plateaus, those higher time frame trends. You got to understand at what point you are in that trend, and it would appear to be that we're at that sort of plateau on a number of these markets. So as we go down the time frames, you're just going to see a similar kind of picture. I would say it is still looking like it is trending reasonably strongly to the upside on the daily. And I would have said that on the 8 hour, but again, like the other ones, we have this significant pullback on the 8, which is, as you can see on the 4, is the same depth as the one before it, with divergence on the indicator. So that suggests to you that maybe the strength above that level there, that level about there, is starting to weaken. Now, again, it could be news related. Will it overcome that and continue? I think at the moment we just don't know. And these are just getting messy. So there's a high, there's a low, there's a high, there's an equal low. So that means, you know, our trend is not really intact. We have to wait for our trend to be intact. And we have to wait for agreement on multiple time frames. So, you know, what you want is to see, you know, here's a daily chart. You want to see, okay, so we've got to pull back into the buy zone here. We've got a beautiful candle here on the daily. This would be an opportunity to get in as well. And it was last week or the week before. We had multiple opportunities to get on the daily and ride this wave back up to a support level. But now that wave has happened, we just have to wait for the next move. But, you know, when you see that on a daily, then you can go, so that is pulling back into 120 and then shooting up again. So back into 120, what does that look like on the hour? So when was that? 29th of the 11th. It's probably not the best chart to do this on. I think the euro dollar is probably better because we had the same thing on that. No, it was here. So this was an opportunity, as I mentioned before, on the 21st of November, this was an opportunity here at 10 o'clock at night, or actually, yeah. So this was back at 103. So as you're pushing up and pulling back into the buy zone, in that case, what does it look like on the 1 hour? Where was I? That was 10. That was more like, hold on. It's sometimes quite hard to look back. So that was just on 103. Did pretty much the same thing. But here, so it's not giving me what I thought I was looking at. I'm going to move on. But basically what I'm saying is if you can identify that sort of pattern on the higher time frame, pulling back in here before it moves up, what you can see on the and you see that on the daily, you can also see that on the monthly, on the sort of 1 hour chart as well. Like you can go right down to the 1 hour and you can see that's also making higher highs, and then it starts to make lower lows, as in what's this pullback here, and then it starts to make, it gives you either an equal low and it gives you a higher high, and it starts to make higher highs as well. And you can identify that on the chart below as well. And if you get the daily and the 1 hour chart giving you the same sort of, because, you know, within this daily trend, there's trends within trends. You know, there's trends in the 1 hour as well that are, you know, more detailed than the daily. So yeah, hold on, let me get rid of that. Okay, let me know if there's any charts you particularly want to look at, by the way. But basically what we're doing is just a top-down approach looking for opportunities. And opportunities are, on any time frame, a pull back into the sell zone or a pull back into the buy zone. That's what you're looking for on any chart. Anytime you see that, there's an opportunity there. Now, you can see that on the monthly, you can see it on the weekly, daily, 8 hour, 4 hour. Now, just be aware that, you know, each candle on the 4 hour chart, you only get one candle every 4 hours. So you have time to assess that. You have time to assess, okay, I mean, this is not the best chart, but even on this not particularly great chart structure, you're still getting moving averages moving into the right area, just here, 10 above the 20, 20 above the 50, and then you're still getting a pullback into the moving averages, a nice green candle, and a wave up. You're still getting that on a chart that doesn't look particularly great from any other perspective. This is not great trending, but you're still getting those patterns develop. So that's what you're looking for. You're looking for what we call a trigger candle on any time frame. And I'm at my charts at least every 4 hours, maybe every 2, where I can, but at least every 4. So really important to figure out on the time zone where you are, when do your 4-hour candles print? So if it's 6 o'clock at night, 5:30 to 6 o'clock, I'm doing a 4-hour scan. I'm looking at everything 4-hour and above, and I'm looking for trigger candles. I'm looking for my strategy. That's one of the strategies that I use. There's a couple, but you're looking for candles that opportunities that meet that strategy. And if I miss something on the 2-hour or the 1 hour or the 15, I don't beat myself up because I can't be sitting looking at every chart every minute of the day. Now that's one way to trade. The other way to trade would be, because it's really important to fit trading into your lifestyle. So say you only have a certain amount of time to trade every day. Say you've only got between 5 p.m. and 9 p.m. and that's all you've got. Then it might be more beneficial to go down to your lower time frame. Well, you can still do all time frames as well, but go down to your lower time frames and see. You could then get a move like this. So a move like, here we go, US CAD 8-hour chart. This move is too fast for the 8-hour chart. Too fast. Okay. In order to get on that move, this big push to the upside, and again, it's not really within the context of any trend, so it doesn't, as far as I can tell, it doesn't really, well, I guess you'd have to say it's still in an up. Okay, let's do a top-down approach on the US CAD. It is still in an uptrend on the monthly, even though it's slightly above its moving averages. The weekly chart, oh, there was an opportunity right there on the weekly. So, and perfectly above 134. So, okay, so from the 13th of the 11th, or rather the 20th of the 11th, when that candle finished, any trending above 134 would have been an opportunity. So just even on the weekly chart, you can see where these opportunities start. You can see where they are. Now, daily. Okay, so just on that pullback. Okay, so rather, this is a pullback. This is a continuation of the longer term trend. This is a pullback, continuation of the longer term trend. So this is the pullback. The pullback, okay, high, low, high, low, lower low, lower high rather, lower low, lower high, lower low, lower low, lower high, higher low. Once it gives you that higher low, the downtrend is finished. Once it gives you this, once it breaks the previous high at about 135, we're now in an uptrend. Then you pull back into that 134 level and give you a nice little green candle. As the 10 overtakes the 20, enter above that 134.76, stop below the low, ride the wave, which is exactly what you see there. So you're putting your time frames together, and that that's how you're finding opportunities. So the other difficult thing with trading is to appreciate when there are no opportunities, at least on the time frames that you trade. As I say, to get we had a big move to the upside, so let's just keep going down the time frames and see what we see. But it's hard to not see things in hindsight as well. So again, we're in an uptrend. We're pulling back, giving you a nice bullish candle. We're in the process of a wave to the upside. which is what you can see on the daily, but on the 8, we're now starting to flatten off a bit. Okay, so the wave has happened, but it's sort of starting to die off a little bit now. It's happened it's gone all the way up there, but now we're starting to die off a bit. But it's suddenly given you a massive bullish candle. So we've just got messiness here, like there's no clear trend there. There's no clear trend here. There's no clear series of high highs. Like when the moving averages are all bunched up like that, they're not giving you any information. It's really only this sort of thing which is giving you information. This is giving you nothing. But as I say, you go down to these lower time frames, you know you've got general momentum to the upside on the very high time frames, and you go down to the 5-minute rather. Say, you know, 3 o'clock PM to, I don't know, 5:30 is the only time you've got to trade. Well, this is moving on the 5-minute. So that might be worth, you know, you might just be looking at every 5-minute trade chart. You know, just scan through your 5 minutes. Is there anything happening there? Scan through your 15. Is there anything happening there? If you've only got a really short time to trade, where are the opportunities there? Because there's one right there, wave up, pull back, wave up. There's one on the 15. And again, this chart is moving even too fast for the 15-minute. So go down to the 5-minute, and there you go. Wave up, pull back. Here you're just trending to the side, but here you've got a high, you've got a low, you've got your moving averages in that nice geometric fanning pattern. In this case, you've got the 200 in line as well. You've got the 10 above the 20, above the 50, above the 200. So everything is suggesting moving to the upside. You've got a buy zone established. You know, there's opportunities to get into that here, and you've got convergence to the upside on your indicators. You can trade any time frame. To answer the previous question, you can trade any time frame. You don't have to. What time frames you trade really depend more on your lifestyle, how you want to trade, rather than where the opportunities are. I hope that Diana answered that question. So you can find time frame, you can find opportunities, you can find what I like to call trigger candles on any time frame. Let's have a look at maybe some metals. Always interesting to have a look at what gold's doing, although I don't actually think it's doing a lot. Saying that though, I mean, obviously when it was in this sort of pattern, it was really nice. Since then, it's sort of gone to the side here, but it has sort of pushed down and pulled back. So, and landing right at that sort of 1800 level with a nice bearish candle, although that candle is fairly new. So again, that looks like a push down and a pull back. We don't really have downward momentum established yet on this monthly candle, apart from the fact that we've got a lower low. You've still got the 10 above the 20. What are we looking at on the weekly? And unfortunately on the weekly, this push down that you had is now sort of invalidated because it's pulled beyond the sell zone. So again, you know, if you're looking at the weekly and you're thinking down, and you look at the monthly down and you're looking at the weekly and you're thinking up, and then you're looking at the daily and you're thinking, oh goodness, who knows? Who knows? It's sort of like, then it's probably not the chart to be trading. Big push down there. We don't know why that happened. Yeah, so there's no real trending on that at the moment. As I say, like here was an opportunity to ride a wave up, but that was a very big candle to get in on, and it hasn't really It's now moving to the downside. So this is a bit mixed as well. What is silver doing? Similar picture on the monthly, pulling back into some sort of support level here, 22 or so. But beyond and even beyond this massive support level here, weekly. So this uptrend, you'd have to say on the weekly you're still in an uptrend. On the daily you are too. You're pulling back. You've got sort of moving averages starting to fan out nicely now, but you're still pulling back. So that could, well, if it turns around here, if it does, then I guess it would be in line with the daily. But as we look down, you're going to see that it's in a downtrend. So we're too mixed across the time frame, across the time zones. Oil, Brent oil, let's look at. So this I kind of expect. Okay, so here's one that I've been expecting to move to the upside, and it hasn't done it yet. Why did I expect this to move to the upside? As a few months ago, back in September or October, I was expecting oil to rise. I know we had this $100 level here, and that obviously is a massive level as well. But I've been expecting oil to rise for a while, but it hasn't kind of done that. Why did I expect it to rise? Because push up, pull back, push up, pull back, you'd expect it to push up. Funnily enough, it has not done that. So, and it could just be as a result of this 100 level, which it's struggling at. Now, it could very well push up to 100, push up again, push up a few more times and then break. It may very well do that. But as long as we're in that sort of range between 100 and 83 or so, we're not going to see any trending unless we go down to the very low time frames and look for trending in between that range, which you might find. But again, that is range-bound trading. You are better to trade, which is possible, but you really are better to trade when, say, the higher time, the weekly and monthly at least, are giving you higher time frame momentum, pushing you along in whatever direction you're going, whether it's up or down. Also, the NZ pairs have been giving a lot of opportunities recently. The New Zealand CAD and the Aussie CAD and stuff like that. Monthly, pull back into the moving averages, but beyond on the weekly, on the monthly. Really big push up on the weekly. On the daily, really nice trending here. So this is where a lot of action has been recently. If you look at that, so the moment the 10 crosses the 20, the moment the uptrend, the downtrend turns into an uptrend, right? We know we are in 1, 2, 3 bearish months, bullish months rather, 1, 2, 3 bullish months. We know we're pulling back. We've pulled back beyond in the weekly, so up we go until such time as we hit some sort of resistance level. And then you get this nice fanning pattern on the moving averages. There's opportunities to be had even on the daily, but you can go down the charts and look at, pick that off, pick that off, pick that off, pick that off, that off, even that one. So, you could have gone in on that one and you may have been stopped out. Well, that's why it's always a good idea to give your stop a little bit of room. And but then even if you did stop out, you could have gone straight in on the next one. You've still got nice convergence on the indicators here. So there's opportunities on the 8 hour. There's been opportunities on the 4 hour at the moment even. Okay, so there's potential. Again, I'm not putting out trade calls here, but there's an opportunity on the 8 hour. It's a little bit overextended now, unfortunately, on the daily. So when you see how on the daily you've got, you know, really nice wave up, but you've now got a little bit of a bearish candle, an indecision candle. Now, a long way from the moving averages, further than it has been before. So that is not a good sign. So in other words, your 8 hour doesn't quite match with your daily. And I think if we went back down the charts, you'd start to see a little bit of divergence on these lower time frames. So that sort of suggests, right, that I think we'll have a deeper pullback. We'll probably have a pullback that is more in line with a daily pullback. You know, probably to, well, let's just call it 85, because by the time it gets to 85, the moving averages will have caught up to about 85. So I would expect it to, and also the other thing you got to look at is there resistance around 85 on the higher time frames? I think you'd probably have to say, yes, there is, but there's quite a lot of mess around there anyway. So, yeah, so I wouldn't be going in based on that alone, because I think it has a little bit more of a pullback to happen. New Zealand, US, similar thing. So, you know, you would expect this to move down. The Kiwi has shown some strength, but then it is now, again, like so many of the other charts, at a level, getting stuck at that level, suddenly putting in a red candle after a series of green candles, even though it's only a couple of 2 days into the week, but there is the 64 level that we're getting stuck at. Daily, you've had some opportunities to go to trade long, pulling back into the buy zone potentially here, but big pullback on the lower time frame. So as I say, here it looks like a downtrend, here it looks like an uptrend. So your time frames are not quite in line at the moment. Again, looking at the higher time frames, I would expect it to potentially head south from here, because your main sentiment for the market should come from the higher time frames, and then it really is just a matter of getting your lower time frames in line with that. Now, are there any other charts that, okay, so I'll just answer a few questions. Abdul, do you use any stop loss? Absolutely. To trade without a stop loss is a stupid thing to do. Never ever trade without a stop loss. Do you use any stop loss, and if so, where do you place them, and any profit target for? Okay, say if I was going to, okay, say that this, not that you really trade the monthly anyway, but say this was, I was considering this a trigger candle, and it has all the elements of that just in what it looks like at the moment. Again, let me be clear, this is a monthly chart. We're only 6 days into the month. You don't normally charge trade on the monthly anyway, because there's nothing to compare it to further up. But let's say this was an hourly candle and everything was all right for this to move to the downside. The push down and the wave up into the moving averages, into the sell zone, the top of this candle here is where you put your stop, particularly when you've got a big number like 64 as added protection. So you want to put your stop maybe a couple of pips above that swing high. Because and why do you put it there? Because if it does keep going up, you know, you want to be out. If it does keep going up, then your rationale for being in that trade is no longer valid, because it hasn't given you another wave. Okay, so whenever that candle, whenever a new one prints, you'd want to enter at the base of this candle, at the bottom of this candle, a couple of pips below the low of this candle. That's where you'd want to enter. So low of the candle and stopped slightly above the high. In the case of a downtrend, obviously in the case of an uptrend, it's the opposite. So that's sort of where you want to enter. Do you just trade stocks as well, or just Forex? Predominantly Forex, I have to say. It depends where the opportunities are though. Indices, I do trade sometimes, predominantly Forex and some commodities, metals. Yeah. Another question, have you shown, oh yes, I think I just said that. Oh, and where would you get out? Okay, so your first profit target should be, so if your stop loss is at 64.5 and your entry point is at 62, well, that's like 200 pips. Okay, so that's on a monthly chart, so that's not quite, it's not going to give you exactly. So say it's 50 pips between your stop and your entry point, which it's going to be unless you're looking in a monthly chart. This is another reason why I trade sort of high time frame charts, because if you trade lower time frame charts, your spread is in proportion a much higher, proportionally much higher. But anyway, on a typical sort of 1 hour chart, if there's say 50 pips between your stop loss and your entry point, there needs to be at least 50 pips of clear space where you would expect it to go to make it worthwhile. Because you don't want to be earning, because you are going to lose some trades. There are going to be some trades that you're going to lose. And what you don't want to be doing is losing more on your losing trades than you're winning on your winning trades. Because probability wise, that's going to mess you up a bit. You want to be earning at least as much, if not more, but at least as much on your winning trades as you lose on your losing trades. And then as long as you have a positive win-loss ratio, you're making money. Okay. Budget. What is the best risk to reward ratio for you, and why? I think, just get really good at getting one-to-one. Just focus on your win-loss ratio first. You want to be focusing first on winning more than you lose, rather than getting more out of each trade. After you have more confidence in the market and you've got, a good win-loss ratio on your side, then you can sort of look to get some of those really long runners. For instance, the NZCAD that we just looked at. So what trade? What? So say you're getting in, I don't know. Where's a good one? There. Just the difference between this is why you also want to get on quite small candles. I mean, that's a good one. There's a good one. There's a nice one there. Push up, pull back. Nice small candle. Nice bullish small candle. That's where you want to get in. So just focus on getting, like, there's your stop loss at about 80.54 or something, and there's your entry point at about 80.92. So you want about 50 pips out of that. So you want to get to about 81 and a half. So just get to there. I mean, just get good at being able to do that, being able to pick the direction. Once you get better, basically what you can do is not put an entry point on your trade. Basically, you just move your stop loss up. So you enter there, but you don't set a limit. And as it does each wave and pulls back, then you just move your stop up. Eventually going to get stopped out. You might get stopped out there if you've moved it up to there and it's gone there, but that's fine. You're still getting more out of it than potentially you would have before. But as I say, get good at getting one-to-one first. Win-loss ratio. Cool. Okay. Well, what I'll do is just finish off by saying, if you want to get hold of IC Markets, this is the way to do it. And that's it. Thank you very much for attending. I hope you got a lot out of that. That was it wasn't a full market scan because I would normally not talk about it as I'm going through it. But that's essentially what I'm doing, just looking for opportunities, looking for trigger candles, I call it, looking for trigger candles on any time frame, particularly the 4 and above, I think, is kind of generally my style of trading. All right, thank you everyone, and I wish you all the best and have a lovely day. Okay, bye.